The Rebel Capitalist Show.
Let's go back and start with this, the one with Volcker here. It's from the great moderation to the great recklessness. Do you want to go over the main takeaways from this chart?
Well, I think we're all familiar with Paul Volcker, and his job was basically to kill inflation, and now we're seeing this exact reverse Paul Volcker mandate, where central bankers all over the globe told us we have to do more because inflation numbers are too low, because deflation is such a big threat. Now inflation is here. Now they keep telling us it's transitory, although Jay Powell had to throw in the towel recently. But I think we shouldn't forget that market participants, that politicians, that economists, that basically everybody was getting used to this great moderation environment, and I think it will take a while until we realize that now we're moving into a new regime, and I think I think it's not a conspiracy or anything. I mean, that's exactly what everybody was telling us. We need more inflation. Now it's here. Now we should realize what this means for our portfolios. So that's George, why I always really enjoy talking to other asset managers from Brazil, from Turkey, from high inflation countries, people that focus on inflation and weakness of their currencies when it comes to portfolio construction. That's basically the first thing that they've got in mind, and for them, gold, precious metals in general, commodities are basically a natural choice. While if you talk to a institutional investor nowadays about the virtues of having some gold in your portfolio, you will probably be ridiculed. At some point this is going to come back, but I want to show with this chart that it's going to be a process, and that it's going to take a while until people really wake up and realize, well, this great moderation is over.
Right, got it. And then we talked about M2 money supply, which is your next chart. And then we've got the money growth significantly higher than in the 70s. So this is measured by year on year M2 money supply. Is that correct, Ronnie?
Exactly. So this number is going to come down. I also think that over the next couple of weeks, this whole inflation mania will calm down a bit. I think that the moves that we saw in markets recently are clearly telling us that inflation it's not a straight line. Probably it's already quite I wouldn't say a crowded trade, but something that will kind of level off for the next couple of months.
Yeah, that was my next question, because you and I are contrarians by nature, I think. So how does that make you feel when you actually agree with Jerome Powell?
Yeah, well, so that was.
Does that give you cold sweats that you get nightmares?
I mean, I have to say, I would rather enjoy having a beer with Jay Powell than with Christine Lagarde. I think that actually my buddy Grant Williams said Jay Powell, he's a nice guy, and I think that he just has the wrong job, but it was his choice. And I think the big challenge for the Federal Reserve now is they have this very tight relationship with financial markets, and I think they really have to fine tune everything that they say, and therefore it was quite astounding that what actually Jay Powell then said was much more hawkish than the prepared speech. that he wanted to give, and that was quite astounding to me. But I think, first of all, let's not forget that tapering is only the first step of tightening,
Right.
and it's. For me, there's really no doubt that the Federal Reserve will tighten too much, as they always do, and that the economy and markets will roll over. So Peter Bocquart, he wrote, if Mike Tyson gave me a fair warning that he was going to punch me in the face, no matter how prepared I am, I would still hit the floor. And I think, the Federal Reserve can try to prepare the markets, but still it won't work. And we know that they're way behind the curve, obviously, and therefore, as you rightly say, I think now Powell caving in and saying, well, perhaps it's not transitory. That's from a contrarian point of view. That's a very interesting point, and it tells me that this whole inflation hysteria will probably level off a bit, but it doesn't necessarily mean that this is over. By no means.
Yeah,
by no means.
Yeah, just because it doesn't go up in a straight line doesn't mean that it's over. Yeah, that's a great point. And before we move on from this chart, I just want to point out, people on the podcast won't be able to see this, but the percentage increase in M2 money supply in 2020, 2021 got up to over 25%. At the highest point, we have two peaks in the 1970s. At neither peak got up above 15%. So we've gone from 15% in two spikes in the 1970s to a spike in 2020-21 of over 25%. That in and of itself is really staggering.
And George, what was the performance of gold last year? In dollar terms, it was up 25%.
Right.
Of course,
Also,
it
that's
might be
interesting, isn't it?
It might be a coincidence, and we can talk about gold later on, obviously. But I thought that's pretty interesting, and therefore I think gold did its job last year, and gold discounted. Actually, it's people should not forget that gold was actually walking from or going higher from 1250 up to 2000, basically in a straight line without any major correction. Now,
Right.
I think the fact that everybody is so frustrated now with gold, and even the biggest gold bulls that I know, they seem to be close to throwing in the towel. I think that's a pretty good sign, and therefore 25% last year, pretty decent performance, and gold, I think, discounted it sniffed out what's gonna happen very, very early on, and I always say, well, don't forget the job of the job of gold is not to make you rich. It's to preserve your purchasing
That's right.
power.
That's right.
If you want to get rich, buy Bitcoin, buy cryptos, buy junior mining stocks, whatever. But don't mix up the volatility and the risk reward ratio of gold compared to those other assets.